like, I think the general consumer is like a very good person, and that like nobody really wants to just completely screw somebody over. But there are some extremists out there on the landlord and tenant side that just really want to kind of see the world burn and just kind of really want to screw you over. And unfortunately, if you do get one of those people, which is, in my opinion, maybe it's wishful thinking, it's like less than 1% of the population, but if you get one of them, they could kind of screw you. And I'm not going to sit here and lie to you and tell you like, hey, it's, you know, having a bad tenant's easy. I've been in that position. This is Laricy Live, and I'm your host, Matt Laricy, giving you unfiltered access to the world of real estate. We cover market trends, news, and give you the honest answers that will keep you ahead of the real estate game. Today's podcast is, should I be a landlord? It's a big question we got. We're hitting that time of year where sellers are starting to think about, hey, I've been on the market for a bit, especially if they've been on the market since the spring, which is like March-ish. And they think, hey, do I rent? There's a lot of people who've been on the market for a couple months, 40, 60 days. And they're like, hey, if I don't sell by X, I might want to rent. So what we did today is we compiled some lists about, you know, for these sellers out there who have questions like this. So what is the biggest misconception about being a landlord? Honestly, most people think it's easy. They're like, I don't know, rent it out, make a ton of money, don't do anything. And then they're a landlord and like, shit, this is like a job. It's like a job. If you're renting in Chicago, all the laws protect the tenant, so you have zero, and I repeat, zero rights. I don't care what anybody tells you. I don't care if people watching saying, my buddy's got a lawyer. Listen, I own a crap ton of properties myself. I got some high power profile attorneys behind me, and sometimes there's nothing you can do. All right. So the laws protect the tenants. So when we talk about the biggest misconception, it's just that you think it's easy, but actually it's pretty difficult. It's a pretty difficult thing to be a landlord. What types of rental properties are most common in Chicago? There's not one. You know, mostly condos and multi-unit buildings where you're renting out, units in there are more where most of the rentals are. I don't see as many single-family home markets for rent in my markets, and that's because there's not as many single-family homes as there are condos, and most people in the single-family game are buying them rather than renting them, but most things are going to be like some sort of condo or multi-unit building. Are there certain buildings that allow rentals and ones that do not? Yeah, so some buildings, specifically in like high-rises, have rent caps. Now, that doesn't mean smaller buildings don't have rent caps, but most of the time it's in bigger buildings. And a rental cap means only a certain number of units can be rented at a given time. So let's say a building has a 20% cap. That means 20% of the building can be rented. If 20% of the building is currently rented out, you will go on a wait list. So imagine like you're waiting in line at the grocery store, waiting your turn to be able to rent. And sometimes that wait list can be 30 or 40 units long. Now, the thing is here with these rent caps is that sometimes there's maybe 30 people on the wait list, but nobody actually really wants to rent. So now every building is different. If your number gets called to rent and you don't rent, you go to the bottom of the list, you hold your place. Some buildings are now starting to implement fees to be on the rental list to try to like get people off from just being on it. So there's a lot of different things behind how rental cap works, and it's very relative to that particular building. But typically I see it mostly in bigger buildings. Can you own Airbnbs or VRBOs in the city? Of course you can. They're like finding a needle in a haystack. There's not a single big building, high-rise building, that's a condo building that allows Airbnbs in the heart of the city. Not a single one, okay? 30s Huron and 545 Dearborn allow month rentals. I mean, I got some clients that get away with Airbnbs in there, but like legally, it's not in the rules and regs. You can do corporate rentals in those two buildings. But otherwise, to do an Airbnb, you got to find like a townhouse or a fee simple or like a multi-unit building, and then be able to do it. Now, even if you're able to find a place that would allow it, the street can shut it down. Cedar Street's a great possibility. We used to have a 3-unit building that was an Airbnb and had the license by the city. And I remember somebody who wanted a bid on it said, hey, if you don't take our price, we'll just go across the street, buy that unit or buy that building, and we'll turn it into an Airbnb. And I said, oh, okay. I mean, I want the sale. They didn't offer a price that the seller wanted acceptable, so I was upset. But then they bought the place across the street, turned it into an Airbnb, and everybody on Cedar Street got together, complained enough to the alderman, they shut it down. It was in Crane's paper. So, I mean, like, that can happen. But typically Airbnbs and VRBOs just aren't that big. I mean, we were named one of the least friendly Airbnb cities in the country. Do you own rental properties? Yes, I personally own about a dozen, about 12 or 13 of them between River North and West Loop. When you want to be a landlord, you have to choose and decide what type of investor are you? Are you a long-term investor? Are you an appreciation approach? Do you like cash flow, et cetera? Like me, or do you like the dirt, right? So that you're going to own multi-units. Like me, I'm more of like a hope for appreciation, kind of less work type investor. So I own in like high rises, which have the worst return, the worst ROI on your investment. But honestly, like they go up in value, minus pandemic years. But for the most part, they go up in value, slow and steady. They bring in decent cash flow, and they're pretty much hands-free minus when a special assessment comes. Now you could buy in, areas like on the south side Chicago and west side Chicago and get like multi-units and get like a 10% ROI, okay? You can buy multi-units in the heart of the city and you get like a 5% ROI, okay? So they call them cap rates, really. But I mean, like, you just have to decide, like, what type of investor you are and where you want to be. And like, a lot of people think, the way I do rental properties is stupid. I'm never going to say anybody else is stupid the way they want to invest their money. I think that's a very personal issue. But I think you need to sit down and if you want to become a landlord and think about like how you want to go about it. What are the benefits of buying rental properties? I mean, to me, I really don't think like the way I invest, it's a way that you can retire on the money. It's to me, I look at it like another vehicle on the ground to build wealth, right? Like if you have all your money in tech stocks, when the technology stocks get crushed like they are today, you're kind of SOL, okay? If you got all your money in bonds, the bond market takes a shit, like you're screwed. If you got all your money in like S&P and that takes a shit, you're screwed, So like the way I look at it is I like to have a diverse portfolio, right? So like I have a bunch of properties to, have, more money working for me outside of just in the stocks and bond markets. Now, there's tax benefits on top of it. Some people, the benefit for them is it's their entire livelihood. There's people who own, I have friends that own thousands upon thousands upon thousands of buildings, and that's what they do for a living. They just manage their buildings. So there's a lot of different benefits. Again, it's very personal how you want to look at it. To me, I just look at it another avenue to add to your portfolio to hopefully build enough wealth for yourself to someday retire, to be able to, just have a good, well-rounded portfolio. Now, I'll never retire, so that's not my goal of having them. I just like having diversified portfolio. Do rental property loans work differently? Yes. You have to put down a minimum of 25% to buy an investment property. So there's a minimum 25%, and then the interest rate is anywhere from like 1 to 1.5% higher. So you pay an extra, extra point or point and a half. So there's definitely a heavier cost involved. Now, a lot of people who buy rental properties, they try to pay them off. That's a big thing that I do. I try to pay off one a year. So this way that like my cash flow goes up even more. But there's a little bit of a heavier tax with it, heavier rate with it when you're mortgaging or financing. That's why you do see a lot of cash purchases for investments. And a big thing, especially in the last few years, we were seeing people kind of like make their own REITs. Of pooling. They just kind of like made them up between them and a group of friends who all had a bunch of money, and they were buying them together cash to try to, maximize their cash flow and try to diversify their assets. What are the best ways to finance rental properties? Just like I said, you can get a loan. If you're doing a 1 or 2 or something like that, do a loan. If you got the cash, if you have cash and the cash, like by getting rid of that cash, it's not going to affect your life in any means. I'd pay for it cash just because like the overhead cost on it is a little bit more because of the rate. And then, the other creative option is, you can pool with some friends and kind of create you guys' own, real estate investment portfolio. What are the biggest red flags you see in clients that want to become landlords? We get a lot of sellers who can't sell. So like, hey, I'm going to rent. And then they rent and then like crap, this was like a big problem. Like I didn't think I'd have to do all this work, and they have like a nightmare tenant and they're complaining all the time. And I'm like, listen, like, Like, this is like another job for you to handle. Like, I didn't say this would be an easy thing. I said, like, I always give everybody the worst case scenarios. And I'll tell you guys, like, I don't know, maybe 70% of my rentals, like, I'll get a tenant in there and, like, you never hear from them. It's great. But then 30% of the time, you get a tenant that's, like, literally obnoxious. Like, they email you at all hours of the day, a light bulb's out, they're threatening to move out because you didn't change a light bulb within 4 hours, and they're just crazy. And, like, that is, you know, a red flag for landlords is the fact of, like, being like, do you have the time to manage it? If not, hire a management company. That's another way to go about it. But I think the biggest red flags that I see with clients is they're just not prepared mentally to handle it. It is a lot of work, and if you're really busy and you don't like to do extra work, then it's just probably not the best fit for you. Another red flag is just the fact that, like, you know, people don't realize the tax complications, right? So, like, if this was your primary source of residency and then you turn it into a rental property, you know, you have to start paying capital gains, you know, after it becomes a rental for so long. So, like, you have to occupy the property for 2 of the last 5 years to not pay capital gains. But after that, you got to start paying capital gains. And capital gains is a lot. I don't know where it's at. I think last I checked, it was around like 28%, which means that if, like, you make $100,000, you're paying 28% of that back to the government. Now, you could do a 1031 exchange, what they're trying to get rid of. And a 1031 exchange for everybody out there is like you pretty much take your money and then use that towards another property to avoid paying capital gains. At some point, whenever you sell that property, you'll be subjected to all the taxes. But that's generally a few of the red flags, is not knowing that you have to do work with it and know that there are some tax implications that could happen in the future. Can you make an income on rental properties? Sure, you can make a lot of money. I mean, I got friends that are making, you know, millions upon millions upon millions of dollars a year just renting out properties. Now, again, to make that type of money, I mean, you gotta, like, you're stressed out to the nines and you're pretty much working 24/7, have a management company, you have a ton of expenses going out trying to make sure you have this. You have on-site staff, maintenance, you know, bookkeepers, etc. So it sounds great when you think about, like, all the money you can make, and then you look at all your expenses and it's really not that much money. But, you know, there's a way to make decent income. You know, I know with my own properties, I'm definitely not going to be retiring off what I make a month. It's pretty nominal, to be honest with you. I mean, my worst unit I make like maybe $50 a month, and on my best unit I might make like $1,000. So, like, again, we're not talking like a ton of money, but every dollar adds up, you know, and that's what I tell a lot of people who are getting into the investment game. Is like, don't think you're going to retire. Don't think you're going to get rich quick off this. You make a couple bucks or break even. You're building equity in your property. And in times of high inflation like this, it's nice because, you know, your money's kind of protected against inflation because your property is going to be going up with the inflation. How is being a landlord in Chicago different than other cities? I mean, you look at Florida, somebody stops paying your rent, you could literally just go there, throw all their shit on the front lawn and change the locks. You could do that. Can't do that in Illinois. Illinois, specifically Chicago, the laws protect the tenants. So, like, we are a tenant protected state. So, you know, when they had that, pretty much eviction moratorium where people weren't able to ban evictions and stuff like that, like, a lot of people got screwed because, you know, don't get me wrong, there's a lot of people out there, there's a lot of bad landlords, okay? But there's also a lot of good landlords that, like, hey, I'm not saying I don't feel for people that are in a position that can't pay their rent and, like, they're kind of screwed, but, like, there's also a lot of people, and I know them personally. I had clients that were in this position where they couldn't pay their bills, and then they had the rental property, and the tenant's not paying their bills. So now they're paying double bills with no income, and they got kids, and, like, this was more of like they had to rent their place out because our market was terrible. So if you had a high rise in River North, you had a kid, you had to get out of it. You couldn't sell for a price because the value dropped so much. You couldn't afford to come out of pocket. So then you rented it out. And then these guys tried using this eviction moratorium to try to stay in there, to just not pay it. And I'll tell you, there's a lot of people in my markets, a lot of people. I'm not, again, please don't think that I'm saying that, like, everybody was like this. But I personally saw a lot of people, and I had clients that bragged about it. They're like, hey, I'm just not going to pay my rent because I don't have to. I got the money to do it. But heck, if there's this thing out there, why am I going to pay it? And I mean, I blew up on them. I actually lost quite a bit of business because I was just so upset that people would do that to other people. But, you know, there's a lot of things that are like that, laws that are like that even today in Chicago that protect the tenant. So, like, if a tenant doesn't want to pay their lease, they could stay there for 3 months. And after that, then you'd file it with the sheriff, and the sheriff would get them out of there. But the reality is these courts are so backed up that it could be 6 months, 8 months until you get these people out of there. So That's a big problem in Chicago. Not necessarily as big of a problem in the markets we work, but it's there. What advice do you give to investor buyers? Minus what we said, I talk about like vacancy factors. I always say take into fact like the things that you don't think about, like take into account like, okay, what if this is vacant for 2 months? Take into fact of like, what if you have X amount to spend on fixes? Take into account that like you get a bad tenant that trashes the place, and because you're in Chicago, if they trash the place, you really shouldn't take a security deposit. You could get screwed. So there's a lot of stuff that you have to think about when you're trying to invest in become an investor. What happens if you get a bad tenant? You're screwed. Best way to put it. Don't know how to put it any nicer. Kind of screwed. And I'm sure a bunch of you guys are out here like, I got a guy that does this, blah, blah. The average person that's renting out the property has no experience of being a landlord, okay? You got a seasoned investor like myself. I mean, I know the laws. I got people in place to scare people and get my stuff back. And be honest with you, I'm not really intimidated by like a bad tenant because I know exactly how to handle the situation. But for the average person out there, when you have a bad tenant, you're kind of screwed because you don't have the means to be able to do it, meaning that like you might not have a connection to an attorney that can just write something up for you for free, okay? You might have to spend a couple grand to have an attorney send a scare letter. And then if you have a seasoned tenant that knows the laws, they're like, you can't do shit to me, I'm untouchable, which they technically are. What are you really gonna do about it, Or if you get a tenant that trashes the place, right? Absolutely trashes the place. A lot of people don't take security deposits. We encourage our clients on security deposits. I never take security deposits on my properties because the way the law works for security deposits is that you have to put an interest-bearing account, okay? And you have to be giving that person the interest at the end and the money back. And if you don't, you automatically lose that battle, okay? And then if you do decide to ever keep any security deposits and you didn't put an interest-bearing account or you don't have proof of receipts and did the depreciation, so if they ruin the floor and then you have to do like a depreciation of what the floor would cost after 10 years and then take that out of the security deposit. You can't be like, okay, the hardwood floors are ruined, cost me $10,000 to do it, I have a $4,000 security deposit, I'm just gonna keep it. No, how old are the floors? Okay, then you have to depreciate the $10,000 to, amongst how old they are, and then take that off security deposit with a receipt. And then if you don't think, or if they think that you weren't fair with how you took your security deposit, you have to go to the court, or the tenant can take you to court, and then you have to show your receipts. And then the judge will deem who's going to win this case. And if you lose, if you as a landlord, if you lose, okay, you have to pay the security deposit back plus an additional amount of security deposit. So if you took $2,000 from them, you have to give them $4,000. So yes, the tenant makes money. Now that's the way it works. Now, again, the reason these systems are in place, like I get mad about it because I think there are a lot of people who take advantage of the system as tenants. But just on the other side of it, to be on the other end of the spectrum, there's a lot of scumbag landlords out there that really screw with their tenants. And they had to put these laws in place that are so extreme because there was a lot of bad landlords out there doing some crappy things to tenants. So it's like unfortunately there was like a few people that kind of ruined it for everybody else. That's the way I kind of look at it. Like I think the general consumer is like a very good person and that like nobody really wants to just completely screw somebody over. But there are some extremists out there on the landlord and tenant side that just really want to kind of see the world burn and just kind of really want to screw you over. And unfortunately, if you do get one of those people, which is, in my opinion, maybe it's wishful thinking, it's like less than 1% of the population, but if you get one of them, they could kind of screw you. And I'm not going to sit here and lie to you and tell you like, hey, it's, having a bad tenant's easy. I've been in that position. I've had somebody just like, screw it, I'm moving out. What are you going to do about it? Didn't pay me money. I sent a bunch of notices, etc., and talked to attorneys and like, listen, you're going to lose this battle every time. So I just ate the money. So it sucks when you lose a bunch of money for doing nothing wrong and you being a good person. It sucks. It's like the worst feeling in the world because deep down in your stomach that you literally just got screwed and you did nothing wrong. You were by the book. You couldn't have been nicer and you still got screwed. That's why me personally, I have a bad temper with a lot of people in my business because I literally see people walk all over people all day long over a couple bucks and they completely act unethical and nobody ever checks them. So then Matt Laricy's got to come in here and tear their frickin' head off to remind them that, hey, maybe nobody else in your life ever told you you're an asshole, but I'll be the first one, go right into your face and tell you that I'm not going to stand by here and let you do some sort of unethical stuff to myself or any of my clients. And sometimes I've gotten a little bit of a bad reputation against that with some agents, but I'll tell you right now, you push me, I'll push you 10 times harder back. And we see a lot of that happen in the landlord situations, specifically with getting bad tenants. Do landlords market their own properties or use other third-party businesses? A savvy, long-term, this is my livelihood investor will market their own properties and probably have somebody in-house for it. The general Joe Q consumer is going to hire somebody because they have no idea what they're doing. Now, there's an in-betweener that will do it. They're not like this is their only livelihood, but they got like 20 units. But the general person is going to outsource it to a broker to be able to do the correct background checks, make sure the lease is done, make sure they're protected so that you, as a consumer out there, actually understand what your rights and not your rights are, and make sure that you get a good quality tenant to make sure that you're not in this bad position. If you use a rental management company, do you still make money? You do. They take my management company takes about 5% of the profit that I make a month. And sure, it's high the way I look at it, right? I mean, I own high rises, not really much of a job, right? But I also don't have time to do the job myself. So, it's the cost reward. I mean, I don't have, whatever, let's say it's $100 a month. I don't care about losing if I never have to deal with anybody. If I had more time, to me, $100, I mean, first off, I think $5 is a lot. I'm a cheap person. I grew up not rich, and I've really fought hard to make money. So I really value the dollar big time, and I don't like giving up 5%. But I always do the equation of what's my time worth compared to what I'm spending. And at the end of the day, if I'm spending more time on something and I can make more money doing something else, then I'm going to outsource that. Okay. So for me personally, hiring a management company is better because I can make more money by focusing on my business and focusing on my own rental properties. Now, on the other thing to think about, guys out there, if you did hire management companies, you get a write-off. If you're paying 5%, maybe you don't have to pay a full 5%. Maybe you only pay 3% because you could write off 2 of it. I don't know what the exact percentages that you could write off, et cetera, but I'm saying it's not always the full amount. But I do think if you're very busy person and you're out of state, you don't want to deal with it, hiring a rental company is not a bad idea. Rental prices are going up. Will that impact buyers wanting to be landlords? Yeah, I mean, rental prices are through the roof. They're up anywhere from 19 to 25%. I actually have never seen a rental market this hot. It's insane. I had a rental that I was renting out for $2,100 a month, since I've had it for the last 8 years. I had a tenant, said they want to move out. Good tenant, by the way. Great tenant. This tenant literally called me and said, hey, I got a job transfer. I know I'm on the hook till March. I'm asking you as a person. This is what he said, just like this. I'm asking you as a person. Would you let me out of my lease, but give me some creative solutions of how I could get out of it? And I said, hey, first off, I commend anybody who's going to call me asking to work out with them. And I said, listen, if I can rent out the place, before you want to move out for at least what you're asking, and you cover whatever commission I got to pay out, so I'm pretty much whole, then I'm willing to do it. I win, you win. Okay. We ended up renting that same place out for $2,550. Always rented at $2,100. I had 13 offers day one. Last time I took it took me 30 or 45 days to rent it. It's insane. And I think a lot of people are seeing that again, because 2 years ago when rentals dropped to 20% below history, people were like, oh, I don't think I ever want to be a landlord. And now people are seeing these rentals fly and wow, I think I might want to be able to be a landlord in the future. And the other thing that it's affecting is it's making a lot of people who were renting, we had a lot of people who got scared by the rates and were like, hey, the rates are a little bit high. I think I'm going to go rent. Now they go in the rental market and holy shit, it's literally cheaper for me to buy the same product than rent. A good example, that property I just talked about, that $2,500 a month that somebody's paying me, you could own that property for $1,850 if you put down 20%. $1,850 a month, okay? And you're paying $2,500. So that's insane. That's just insane. And I think a lot of buyers now are coming, or a lot of renters are coming to be buyers again because there's nothing to rent, and they're coming back to the buyer market. So I'm liking that part of it. The other thing I like about these rental prices going up, and I don't know if we touch on this in these other questions, but the fact that it's clearing out inventory. Why, you may ask? There's a lot of properties in the high-rise sector: Gold Coast, River North, Streeterville, Old Town high-rises, Loop, New East Side. You couldn't give those damn things away. Literally couldn't give them away, right? I have a lot of inventory I couldn't give away. And in 2020 and 2021, if we couldn't sell it, the rental market was shit, so you couldn't really rent it. Now, if you can't sell, rent it for a profit, right? And a lot of these people that are renting it out, it's clearing inventory out. I have a theory, guys. Remember I said this. We got to timestamp this so we don't forget this one. So when this happens in January, I could tell you that I said it, I saw it. We're right now hovering around about 7 months-ish in most of the high-rise markets. That number is going to drop down to probably around 4 months by the end of August because a lot of people who couldn't sell it are going to rent. And we're going to probably hover around a 3 to 4 months in high-rise inventory for the fall and early winter because a lot of sellers are not going to want to sell because it's naturally not the right season. And then that first week of January is going to hit when the spring market hits and all the people that were selling before that rented are gone. And now we're sitting around a 3-4 month inventory period and the demand comes back to high rises and boom, there we go, guys. The high rise market will officially be back. Now, I said this year would be the year of the condo, and we're seeing it firsthand. We're seeing condo sales come roaring back. But next year, we're really going to actually see it turn into a slight edge to a seller's market. So these are the trends you have to watch and follow. So when people ask, like, well, how do rents affect the market long term? This is how it's starting right now. Today is how it's going to affect 6 months from now, 9 months from now, 12 months from now. And that's how we try to predict the market. And why we're so accurate and good at it is because, like, I literally study everything, and we try to look at how that's going to affect the market. So these rising rents are drastically affecting the market. What trends are you seeing in the investment markets right now? We're seeing a lot of people want to get into the investment market because inflation is high and the stock market is volatile. Typically, I've had so many clients call me recently. It's like, hey, I want to get in the multi-unit game. I'm sure it's probably terrible. I'm like, well, who told you that? They're like, well, the market's bad. I'm like, well, what market's bad? It's like the stock market. The stock market's bad. So obviously the real estate market's bad. I'm like, well, I mean, they are intertwined in some ways, guys. But guess what? The shittier the stock market gets, the better the investment market gets. Because guess what? There's still a ton of people with money. The worse inflation gets, the better the multi-unit game gets. Because guess what? People are like, shit, my money just sitting in a savings account is now being worth less every day. So I'm going to stick it into an asset. And then on top of it, when the rents are, maybe 25% higher in that area than history and inflation's high and the stock market's bad, that leads to an unbelievable multi-unit game. And that's why the multi-unit game right now is really, really hot. Really hot. Is there a good time to buy for potential landlords? Fall time, because it's not as easy to rent. So people know that they're going to be sitting on either a lower rent or they're kind of sitting on a bad cycle to buy into it. So there's not as many investors, although I don't think that's going to be the case this fall. The other thing to know is the good time to buy to be a landlord is when the stock market's really good and inflation's low. Because then, a lot of people want to invest in crypto and all this other stuff. Not thinking about buying into multi-units. So right now is actually a bad time to buy a multi-unit. And, last year was a great time. 2020 was an unbelievable year to buy multi-units because everybody's, getting that eviction moratorium and people are scared about rentals and people thought rentals wouldn't exist again and cry, complain the world's going to end. And now the rental market's great. And people are like, should have bought a rental market in 2020 or early 2021. Yeah, well, now we're here where we're at. So, there's also never a really good time to actually 100% predict it either, guys. Let's, not to be completely dramatic on the other end of the spectrum, saying that, you know what, if you find a place you're going to pay a couple extra bucks for and you're going to hold it for the next 30 years, does it really matter if you overpaid for it by 20, 30 grand? And honestly, if you're going to hold it for 30 years, it's meaningless. And the cash flow is still positive, who cares? And you like the place. Now, if you're just buying to buy, then maybe that's stupid. But if you're going to buy it and you're nervous because you're going to overspend by 10 grand and you're going to hold this, doesn't matter. How many properties should landlords aim to own? As many as you want. As many as you can afford without going bankrupt and that you have time for. How is renting a single condo different than a 3-flat? I mean, a 3-flat's way more maintenance. I mean, you're maintaining furnaces, roofs, siding, landscaping, garages, etc. With a condo, you're just maintaining your inside of the unit. It's a lot less maintenance. Is being a landlord a long-term investment plan? Yeah. Yeah, this isn't I'm going to rent for 2 years to make money. This is at least a 10-year play. To really make money. The way I look at it is here's a good way to look at it too for people looking at long-term plays. A lot of people invest money in these accounts to save. They have a kid and they start a savings account so that they have money to pay for college, right? Well, what if you bought a condo for $300,000 when your kid's born and then you use that and 21 years from now, or 18 is when they go to college. 18 years from now, when they go to college, you sell that and you take that money and all the profit you earned over the years you put into that account, and when you sell it, that's the money you use to pay for your kid's college fund. I see a lot of people do that as well. I mean, I actually never thought about that until about maybe 15 years ago when people started doing it. But like, there's a lot of different ways to do this as a long-term play. Let's see here. Can you be a landlord in addition to your full-time career? Sure, absolutely you can. I mean, if you own too many of them, I think it'd be too tough. But you can always own a few of them and manage it, or have somebody be a manager of your properties, and then that way you can do your full-time careers if it doesn't happen. You're just paying the bills. What should future landlords know about the tax implications of renting properties? Capital gains tax when you sell. That's your biggest one. Capital gains. There's certain other tax implications, but it, applies your tax bracket. I'll tell you right now, as a real estate agent, and I own rental properties, I get a little bit of a better tax write-off. But like, there's a million different tax implications that can happen that you should talk to your accountant about. Does rental fee usually cover the cost of mortgage? Which the goal is, the last few years, landlord or investors have been spoiled because the rates have been really low. So right now, you can pretty much, you could last year at least, get a property and have it cover everything. Plus you put a couple bucks in your pocket. Now the goal would be is that you could rent it out and break even, and that's always been the goal. And you're putting equity towards the property. That would be the goal, and everything would be if you bought a condo, it would be taxes, assessments, and mortgage. Okay, if you bought a multi-unit, it would be taxes, vacancy factor, all that other stuff. So the goal is at least break even when you buy a property. Now, if you buy a lot of the multi-units, so you're pulling in at least 4 to maybe 12% cap, depending on the location. What landlord situations have you seen gone wrong? Oh, more than I can count. Literally more than I can count. I mean, we've had people move into properties and stop paying, and then we have to kick them out and pull some favors to try to make sure it could get done. We've seen people literally absolutely destroy the place down to the studs. I've seen people take feces and rub it all over every single body of the property. I mean, I've seen the craziest crap that you've ever seen, no pun intended, that you can ever see in a rental property. So it's less than 1% that something like that can happen. But if it happens to you, it's miserable. What makes a good investment property? I always like something that's in a good location, that's easy to get to, things that people would want to go to, that can grow in value and can make a decent return. That's the way I look at it. Now, other people look at just a cash flow. So again, the way I think is good and the way you think is good may be bad. And that's fine. That's okay. Everybody should have an opinion of what they like, but that's my opinion of a good investment property. Should you live near your rental properties? I prefer it. I think it's easier. I mean, I've had 2 properties light on fire. Okay, it was nice to at least be around it. I didn't go to the property. I have a property manager to go there. But it's just nice to. And when we talk about bad things, I mean, with this one, the dryer vent lit on fire. You hear about this all the time, that the dryer vents would light on fire. This happened to one of my places on Green Street, and nobody was hurt. Everybody was fine. Unit was destroyed. That happened on Thanksgiving Day. I'm sorry, the day before Thanksgiving. So yeah, that was a annoyance. But being by the property really helped out, because this way, I was able to, get the people I knew to help with the work and help the management company involved. I mean, if I was in Florida or something like that, I think I would have been more stressed out. I don't know if it really would be any different, but I'm kind of a crazy type A type person. What are the best investment areas within the city? Honestly, I think it's wherever you like and that you know well. That's where I think you should invest. A place that you know and a place that you like. Can you increase rental prices income over time? Well, you can't increase income, but I get it. Okay, yes. So essentially it's asking will the rates of what you can ask for go up, and in return your profit go up? Yeah. I mean, the reality is more and more the property will continue to go up in value, hopefully. And as the market continues to improve throughout history, what you can ask for rent today is gonna be different than 10 years ago compared to 20 years ago. So yeah, and the higher the rent you can get, and the closer you get to paying off your mortgage and being completely paid off, the greater the income on that property will be. When should you hire a property manager? We talked about that. How do you attract tenants? I think having an attractive price point and having a good marketing scheme for your property will ultimately do it. Some people don't want to pay extra for let's say a broker, or pay extra for pictures or stuff like that. And I say, listen, if you guys spend a couple $100 on marketing, right, but you can rent it, first month, or you cheap out and you don't rent it till the second month, how much did it cost you for that first month that was left vacant? And what's really the profitability? People don't look at the whole picture. They only look at like, well, I could get $100 more. It's like, okay, well, if you could have got $100 more and that's over 12 months, okay, that's $1,200 more you just made. But what if it cost you $2,500 a month to carry that and it took you a month to rent it out because you asked too much? You're now, $1,300 less because you got $1,200 more. So like, again, you have to look at the math. Most of renting, guys, is just a simple math problem. You just got to write it out, see what works and what doesn't work. Best tips for new landlords just starting off. So like, this is good for my clients out there that are thinking about becoming landlords that have the place that can't sell. The reality is like, is it better for you to sell your place now and get rid of it, or take the chance of renting it and hoping that you get more money next year? And you have to look at like what the market's gonna be like next year compared to like what can you rent it for, and like, damage factor, risk factor, etc. And if you're a buyer looking to buy a place to rent it out, like how much time do you have to commit to the property? And are you okay knowing that like, maybe this one or two tenants might not work out, and like, you just got to roll with the punches. It's a big thing I like to say too, that I forgot to mention to people who want to be a landlord, is like, listen, if Apple stock drops today from $100 to $50, and I don't know what's asking us, I'm using easy numbers. It drops from $100 to $50. You're not going to be able to call Tim Cook up and be like, hey, listen, like I'm really upset by this. Let's get this back up, etc. Like you're like, hey, I'm not selling Apple today, so like I don't really give a shit if it drops. Like, what the stock price really means to you only matters when you want to sell it. Because otherwise, if you're not selling today, that money's kind of irrelevant the way I look at it. It's the same thing with your real estate property, right? If you're not selling today, okay, like if you got to take a little bit less for rent, the property takes a little bit of a dip, this year, it doesn't really matter, because if you're holding this for 30 years, it's a long-term play. And these are my best advice that I could give for people who are that are sellers, are looking to rent, and people who are looking to buy to be landlords. Hope you guys found this valuable. Thanks for listening to Laricy Live.